Hello, this is Romanosky from Calgary, Canada, and this is another installment of my video blog series on managing your vehicle ownership life cycle. The last video I did involved navigating the dealer when buying a car, and the part 2 of that now is navigating through the F&I office. So after you have talked to the salesman, you've agreed on a price, there may or may not be a manager that's involved, you've done some haggling, you're probably exhausted and just want to take the car home. But then you get set up in the F&I office. And what does that look like? What are the products that they try to sell you? What offers some value? And what are the areas to look out for? Okay, so this, like I said in the first video, people are pretty good about researching the car that they want and coming to the right decision. People are pretty good about negotiating the price. In my experience, people are terrible when it comes to navigating through the F&I, which admittedly is not very transparent at all. Okay. Now, the dealer might not have much of an opportunity to make anything on a new car. I mean, if you're a volume dealer and you're selling $20,000 cars, and the markup that the manufacturer and importer allow you is only 5%, I mean, you're only starting out with $1,000, and you might be lucky to keep half of that at the end of the negotiations. So those dealers would for sure rely on the F&I department for most of their revenue on the sales side. And there would be a lot of pressure from the top down on the F&I department to make as much money as possible on these items. And so you will get presented with a big list with varying degrees of insistence that you purchase these items. Okay, so how do you navigate through all of that, and what's worthwhile and what isn't? What will increase the value of the car, and what money you're just throwing away? What is just complete junk, and what is worthwhile? And then when it comes to the loan, what's not obvious to many people is that the F&I department marks up the interest rate, and the more they mark it up, the more money they make. And the easiest way for the F&I department to make money is to charge everybody a high interest rate. And this explains why, you know, there's a certain class of B dealers whose business model operates purely on arranging financing for people. And these are the ones that you see with, you know, everybody approved, no credit, you know, bad credit, you know, et cetera, because of the substantial money that they can make arranging financing. And it's not a transparent process. Okay, so let's start with that. First of all, there's good business managers and good dealerships and good operations and fair ones, and there's also ones where they're just complete crooks. You know, I've been fortunate enough to work with some good people, and we sold products in the F&I department that people got value for and made a fair profit, and everybody walked away happy. So it doesn't have to be bad. If you are buying a new car and you get the winter tires fitted before delivery and there's a snowstorm outside, well then that is something you can get value for. If there is you know, 3M on the front clip of your car in Calgary that's preventing paint damage from the rock chips, well, it's pretty good. Okay, so let's start with some of these products that you might get offered, and I'll just give my opinion on them. And of course, where you live and how you drive and your own ownership cycle and so forth will have you know, have an impact on those. The different 3M coverings, and it can be a vinyl covering or another material, but this is a sheet, a clear sheet that's cut specifically for the car and bonded to the car. Okay, well, you know, in Calgary, I think that those make a lot of sense, and you know, I think practically 80% of the cars that I've sold over the years probably have had 3M on it. Okay, so there's other paint protection coatings, hydrophobic coatings, and so on. And those are quite interesting. They can get expensive. My take on those, and they'll probably do separate videos for each of these, but my take on those is that they just make the maintenance of cleaning the car a lot easier. Because the water just beads off, you can generally just spray the car and then have it look clean and then not have to wipe it. And if you wipe it, you risk scratching it. Okay, so I think that there's some value there. I've seen some good interior coatings. I mean, some of it's just Scotchgard, but some of it's good. So I think depending on what product it is, and then I think you can do your research on YouTube and so on, and get different feedback from people on it. And I certainly am a very strong proponent of winter tires, which are just basically a necessity if you live somewhere in Calgary. So I think if you buy your car, let's just pick Calgary, and you go in and the F&I person wants to sell you a manufacturer's suggested warranty, some 3M coverage, and then get you a winter wheel and tire setup. And if the dealership already doesn't provide it, a set of all-weather mats, there's nothing wrong with any of that stuff. It will better protect the vehicle, make it easier to clean, and you'll get value there. Okay. On the goofier end of the scale, some dealers will try to sell you payment insurance or life insurance, usually for about double the going rate that your current insurance provider will sell you. There are some ridiculous etching products which will etch glass with a number or a sticker that will put on the different panels of the car, which drives me crazy. In the guise of some sort of theft deterrent that if you pay $700 to get your windows etched and your car gets stolen, they'll pay you some money. I mean, people have car insurance. You don't have to worry about your car getting stolen, and nobody's not going to steal the car because of window etching or stickers on the body panels. So that's just ridiculous. Those things cost about $50, and some of the dealers sell them for $500 or $600 or $700. Okay, so there's just piles of money to be made from this stuff. I mean, the cost of manufacture is probably $10. They sell it to the dealer for $50, and then they roll it into a finance contract for $600. Okay, and the consumer gets virtually nothing for this. And I'm not a fan of the third-party warranties. Not every third-party warranty is bad. I know there are some decent ones, but there's a whole lot of warranties that they really look for an excuse not to pay a claim. Like if the circlip goes on the radiator hose and the radiator hose comes adrift and spews coolant all over the road and your engine overheats and blows up, they'll authorize 15 cents for the circlip and nothing for the engine. Okay, so it happens, and I'd approach those with a great deal of caution. Some of them will pay the finance office a 50% commission. Okay, when you sell a warranty that's a manufacturer-based warranty, you'll be lucky to get 15% commission on those. But the third-party warranties sell 50% commission. So if you're an unscrupulous F&I manager, you will try to sell the third-party warranty because you'll make more money, but the product is infinitely poorer. Okay, so that is something to watch out for. Okay, so this brings us to interest rates, which is one of the more complex, misunderstood, and non-transparent items when buying a car. If you watched one of my earlier videos, I talked about the cost of borrowing money and how banks or other financial institutions are happy to loan you money at 3% to buy a home, which is a non-depreciating asset normally. But when it comes to a car, which is depreciating and which is mobile, they would ask you for 5%. And if the financial institution was leasing the car, then there would be an additional 2% premium on that to around 7%. And these numbers are, of course, muddied by the incentives which the automakers offer, buying down the rate to offer promotional rates in the 0.99 or 3.9 or whatever it is, okay? As a general rule, if you stick to what the manufacturers offer when it comes to interest rates, and these would be the numbers that are published on the websites, which are normally templated for all the dealers in the network. If you go to, let's just say, the Toyota website and you're buying a Sienna minivan, and they say the rate on that is 2.9%, okay, well, and you go into the Toyota dealer and that's what the loan amount is, well, generally there's no cause for concern there, okay. Same goes with the lease rates as well. These are all heavily controlled and monitored, etc. And in fact, if you go to the, let's just pick Toyota, and you go to the dealership and you just pay MSRP for your Toyota Sienna minivan, which is one of the most highly rated and best minivans, of course, and you lease it through the Toyota Financial and you pay your 3.9% interest rate, and then you buy the Toyota extended warranty from their manufacturer, and that costs you a couple $1,000s. Well, there's no harm in just paying full price for any of that. In fact, that's what I did when we bought our first minivan for our family. It was in high demand, so there was no discounts on the car, even though I was in the business. There was certainly nothing wrong with a slightly subsidized finance rate of 4%, so that's what we took. And the warranty seemed a decent value at a couple $1,000s. So I signed up for all of those, paid full price for everything. I didn't try to negotiate on the sales floor or in the F&I office, knowing that there wasn't that much margin in any of those cars anyway. And what there was a fair profit for the dealer and for the salesman and for the F&I office. Okay, so now, if you are paying something other than 5% on a car finance, well, then you've got reason to ask why that is, okay? And why that's important is that if you're the F&I manager, you can decide to go through the manufacturer, the Toyota Credit or Porsche Financial or Mercedes-Benz Credit or whatever, but you can also go through local credit institutions and banks as well, all of whom are eager for your business. Now, with those institutions, they'll have separate and specific programs for car dealers, for retail lending for automobiles, and they will have a rate that the dealership buys the money at, okay, and allow the dealer to mark up that rate. And the dealer would then get a commission. It might be a base commission for their base rate. I mean, let's just call that 5% for arguments. But they might get a few $100s if they sell it at the 5% rate. But if they sell it at 6%, it might be $1,000. And if they sell it at 7%, it might be $2,000, okay? So you could be in the position that you're sitting in front of a unscrupulous F&I manager who might not give you the best rate on the car. There could be a manufacturer rate that's 5%, but they make more money if they can sell you a rate from another credit institution if they mark it up, okay? So especially if you're an unsophisticated buyer, and maybe your credit history isn't perfect, that can be used as ammunition. I mean, somebody could tell you that, well, you missed that cell phone payment 4 years ago for $100, and therefore I can't offer you the 5%. It has to be 8%, and net themselves a $3,000 commission doing so. Okay, so when the rate is at 5 or around 5. When the rate is the same as on the manufacturer websites, it's a published rate. You're generally everything's okay, and there's no reason for concern. If somebody tells you that you can't have that rate and that they really need to charge you something other than 5% for your car loan. Keep in mind this is in Canada. Other countries might be different. And you want to look at that really, really carefully. Of course, if you have terrible credit and the normal big banks and financial institutions won't decline you, then you can go to something called a subprime market, which specializes in risky loans at very elevated interest rates. That's a topic for another video series. Let's just say here that you have decent credit. And somebody's trying to say, well, you can't have the loan at 5, we can only give it to you at 6. Chances are considerable that you really could have it at 5, and that the difference between the 5 and the 6 is $1,000 commission to the person who is organizing the loan. That wouldn't necessarily be horrible if they disclosed it. If they said, well, our buy rate's 5, but we marked the rate up 1% and we're charging it to you at 6. And so if you'd like the car from us at 6%, that's the service that we offer. Well, that's fine. I mean, you can either accept this service or you can get the money somewhere else. Okay, so that would be fine if they disclose it. If they make up a story saying it's 6%, not 5% because of your credit score, or because of this, or because that program's not available, or whatever it is, well, then there's a problem. I mean, then somebody would not be telling you the truth. Okay, so you need to watch out for that on the interest rate. So to sum up the video about the F&I business, the F&I office, once it gets turned over, you need to realize that many dealerships, this is the primary source of profit when they sell a new car. They may make next to nothing selling you the new car at the price you negotiated at, and may look at the F&I office as the only time they're able to make a profit off of you. They may be fairly aggressive. They may be fairly insistent that you buy one of the packages. When they give you a quote, they just might put in a bunch of stuff in your loan or finance contract and hope you don't say anything. I've seen lots of dealers, lots of F&I situations where they would just put in a life insurance or put in something, and the customer would question it and say, well, I bought the car for 30. Why is it 32 on this loan? Oh, well, that's a fully insured payment. And the customer's like, fully insured payment? I didn't ask for a fully insured payment. Oh yes, well, we put those on all the car loans. So if you have any trouble paying your payment, that you're covered. And the customer's like, no, take it off. Oh, okay. And then they take off that amount. So you really need to watch it, and it can be a little bit confusing because there are some additional fees, a PPSA fee, which is a cost of administering the lien on the car. Can oftentimes be other sorts of lease fees or finance fees, which generally are a few $100s, and which I wouldn't complain too much about because it is a fair amount of work. But if you couple that with a substantial markup in the rates, then that might be overly aggressive on their part. You really need to reconcile the bill of sale against the finance documents and make sure that the number on the bill of sale matches the finance or lease documents, and you can account for any differences. That'll be the subject of another video. I can go into that too. Okay, so let me leave you with the last bit of this video as a cautionary note. The worst example of this I saw in my career was when I was with Mercedes, and it was a Korean guy that came in who wanted to buy a Mercedes ML, and his credit was declined. And I looked into it, and he was surprised too. And on his bureau there was a repossession, which is of course one of the worst things you can have when you're applying for a car loan. It turns out that what happened is this. Now, he was a new immigrant to Canada. His command of the language wasn't great. He owned a dry cleaner, and he went into one of the big GM dealerships to buy, I think it was a Yukon, one of the big SUVs. He went in there, bought the car, and signed the finance documents. They loaded up a $50,000 car with $10,000 worth of extras. life insurance and extended warranties and protection packages and whatever, none of which he asked for. He got home and looked at the documents and realized that he'd been charged $60,000 for the car and not $50,000 for the car. He got mad, returned the vehicle to the dealership, put a stop payment on his check, saying, take your vehicle back. I'm not paying for this. You guys tried to rip me off. And they did. The dealership didn't do anything. They submitted all of the paperwork for funding. They got funded. They got paid from, GM or finance or whoever it was. They let the car sit on the lot for three months. The Korean guy ignored all the letters from GMAC. He shouldn't have done that, but he did it. They repossessed the vehicle and they sold it at auction. This was now 6 months later. The vehicle was sold at full MSRP plus all the extra stuff. That didn't help it at all at the auction. It got $30,000 worth at the auction, and GM Finance came after the guy for $30,000. The difference between the loan amount of $60,000 and the amount they realized at auction, which was only $30,000. He had driven the car less than 100 kilometers, and they sued him for $30,000. So he came to me and I said, well, this just isn't right. Let me help you out with a lawyer. And I said, I've absolutely no doubt in my mind that we can get this taken care of, and that you will not have to pay this amount once we get a lawyer involved. And I did set him up, and he didn't go through with it. And he told me that he was just too embarrassed. And he actually paid the $30,000 to own this car for one day. Okay, so that's the worst thing that can happen to you at an F&I office. Please don't let it happen to you. Okay, so with that cautionary note, thanks for viewing. Please like and subscribe. I'll continue to put out all these series of videos on different topics that relate to the purchase life cycle of your vehicle in different places in the quadrant, and hopefully that was informative. Thank you very much. Romanosky from Calgary, Canada.